Let's talk ETFs once again. David, the Bitcoin ETF is back. We also want to talk about the Ethereum ETF. When are we going to actually get that? And what's that going to do for prices? Let's start with Bitcoin, though, first. So it seems like it was a big week for Bitcoin ETF inflows. What are we looking at in the charts?
So the last time Bitcoin was just like it broke through all-time highs and everyone was super bullish and Bitcoin went from 40,000 to 70,000. And then all of a sudden it stopped. Bitcoin fell down $10,000. Yeah. All of that was super correlated to flows. Why is Bitcoin up almost to $72,000, almost breaking all-time highs? Because of the flows. We had almost a record-breaking day of flows, a week of flows in this last week. Just on June 4th, we had almost $800 million of inflows. Almost $900 million of inflows into the Bitcoin ETFs. The Fidelity FBTC, actually a standout winner here, taking almost half of that. And so just the flows have resumed. The water spigot is back on. Buying pressure is coming back to Bitcoin. And that's what's been going on. So really, really just healthy week. We're hoping, of course, for continuation. This was part of everyone's kind of sentiments about how the Bitcoin ETFs is just going to work. You're going to have your initial wave of demand, but then there's going to be some laggards, some holdouts. A lot of institutions who intentionally move slow just want these things to age. But now the Bitcoin ETFs is starting to approach 6 months old. And so we're getting another wave of flows. IBIT, the BlackRock Bitcoin ETF, is the fastest ETF ever to hit $20 billion in AUM. AUM is just TVL for TradFi. And so congrats to IBIT. Congrats to BlackRock.
Look at this chart, David. Look at this chart. This is the IBIT chart competing against the formerly, now it's the second fastest growing ETF in history, which is something called the GEPI. I'm actually not sure what that is, right? But it's some other large ETF. And it got to 20 billion in 985 days. It's only taking the Bitcoin ETF, particularly IBIT, which is just one of the ETFs, 137 days. That's absolutely insane. Like the difference between these these two ETFs on the charts.
The JEPI is the JP Morgan Equity Premium Income ETF. It's an actively managed ETF out of JP Morgan. The Bitcoin ETF, one of the Bitcoin ETFs, just absolutely blasting through some records here. And it's kind of funny. The ETF, the IBIT, the Bitcoin ETF from BlackRock goes up to like $18 billion almost immediately, like inside of 50 days. It tries to go down. And that was like the last 2 to 3 months of just not positive price action. Yeah. It tries to go down. And then now we're at record high inflows.
What's also crazy about this and why it's going to continue breaking records is because it's not just about inflows. Imagine the price of Bitcoin doubles. I mean, we were just talking on an episode earlier this week of Chamath's bear case bull prediction for Bitcoin this cycle, 250K, right? I mean, that is like a 2x, that's like a 3x from here. And so that's going to get us to 60 billion in IBIT, just like that, price appreciation alone, inflows aside.
I have an opposite take actually.
What's your
about
opposite?
that?
Yeah.
So you say in order to get TVL, in order to get AUM,
TVL,
TVL,
TradFi calls
which is
TVL,
a meme.
AUM.
Yeah, exactly. But we could the price of Bitcoin can just double, and then all of a sudden you'll have double the AUM.
Yep.
Well, the only thing moving the prices these days, Ryan, is flows into the ETF.
You think so?
And so that's the thing that is moving the price. Yeah. And I think there's evidence for this. This is, I think, an answer as to why people are slightly frustrated about the ETH price after the ETF announcement. We had that 25% God candle, the biggest God candle in Ethereum's history.
No net new buyers.
And, that was the crypto industry itself. Taking all of its slack that it would allow and giving it into Ether, but not any, there's not any net new buyers. And then people are still unresistant to buy Ether beyond that. There are still people showing what their portfolios are on Twitter. Some people just snapshot their percentages of their portfolios. And it's still 60% Solana, 70% Solana. The Solana community is not willing to sell their Solana to buy Ether. I think anyone who is willing to buy Ether as a result of the Ethereum ETF news has already done it. And so that's why ETH isn't going up anymore, because it's everyone did it in that one candle. And now if you want ETH to go up anymore, you actually need the flows from the ETF.
All right. We're going to get those flows, though, right? Let's talk about that now. So the Ethereum ETF, 2 questions on people's minds. One is when is it going to happen? And 2, what's it going to do to price? So let's talk about both of these. On when's it going to happen, the estimates that we've heard range from like 1 to 3 months, something in that range. That's sort of what the Bitcoin process was. People can't imagine it would take too much longer than that. We are seeing some positive signs because the issuers are doing things. BlackRock just seeded the ETH ETF with $10 million. They did this with Bitcoin. They're just like, that's nice. There's some inflows for you. 10 million we got from BlackRock.
BlackRock has bought $10 million of Ether in the last week. That's nice.
And they're planting the seed right here. Also, the ETH ETF issuers, a fee war has been set off. So it looks like Franklin is discounting its fees to 19 bips, David. 19
I think that's lower
basis
than
points.
Any Bitcoin ETF too.
Yep. So they're leading the pack. They all compete for the lowest possible fees. And then we've seen some other ETH related products. So this is a new Ether related filing. This is a covered call ETF. Eric Balchunas says all of this activity is going on with the ETH filers is the equivalent of the Oklahoma land rush scene in Far and Away. I've not seen this movie, but this is what he's talking about. Give you some visuals here, right? It's just like this kind of thing. You see what I'm talking about? Where you've got...
we just have everyone on horses just stampeding westward.
For a land grab.
We're going west.
Yeah.
They're all going west.
It's a land grab. That's what the issuers are doing right now. So all positive sentiments from that front. But David, guess who decided to show up this week and put some rain on that parade? It was our friend, Gary Gensler. What's this?
He was apparently on CNBC Squawk Box and says that the ETH ETF approvals will, quote, take some time. So it's not going to happen this week, probably not going to happen next week. I'm going to give it a month. I'm going to give it 1 month.
You estimate a month?
Yeah, early July.
So you don't think Gary Gensler is saying, hey, it's going to take some time, putting the brakes on it? You don't think he's going to try to draw this thing out? Twist the knife.
I think he is drawing it out. He is drawing it out, and that's going to last a month.
Okay. David Hoffman prediction. 1 month is July 6th. So we're going to hold you to that, David. July 6th is the date.
July 6th is a Saturday. So plus or minus a couple days.
Oh, you want to be exact on this, huh? We'll give you a plus or minus.
I'm doing 1 month as a vibe. You're the one trying to make it exact. I'm doing month as a vibe.
I'm trying to hold you to something here. All right. This quote that we just read from Gary Gensler is because he was on Squawk Box with Jim Cramer. TradFi Jim Cramer. So it was hilarious. Here's a segment of Jim Cramer asking Gary why we can't have bonk ETFs next. This is what Gary says.
Bonk the meme coin?
Okay. Now, Polkadot, Cordana, Cosmos, Immutable, Ronin, Bonk, Osmosis, Sushi Swap,
Cordana.
My Neighbor Alice have all traded millions. I'm talking about millions of dollars this very morning. No, should we have a Sushi Swap with maybe an ETF or the proprietary kind? Just I would think that Bonk is a natural.
Bonk is a natural.
These are trading Gary. These are millions of dollars. These things are traded. Shouldn't we have it? Shouldn't we have some sort of product?
Let me say something more broadly about the crypto markets. Right now, without prejudging anyone, these tokens, whether they're the ones Jim listed or other tokens, have not given you the disclosures that you not only need to make your investment decisions, but also that are required by the law. It's a basic concept in our securities market. We, the SEC, tomorrow are turning 90. Happy birthday, SEC.
Oh, happy birthday, SEC.
And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges, like here, this floor of the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. And so you've seen the bankruptcies in this space, and there are some of the most leading lights in this field are either in jail, about to go to jail, or awaiting extradition.
Okay,
there you go, David.
Okay.
That's a taste.
All right, let's unpack this a little bit.
Sure.
Exchanges are trading against their customers. Bankruptcies and leaders in the field are in jail, about to get out of jail, or are awaiting extradition. He's right about that. He is right about that. FTX traded against their customers. That's what Alameda did. They were bad at it. Three Arrows Capital, Genesis, and Celsius all went bankrupt. SBF and Alex Mashinsky are in jail. Do Kwon is the one awaiting extradition. And the SEC is suing Coinbase, Kraken, Uniswap, and guys. Consensus. You've got the wrong guys.
Gary.
But the thing is, like, he's listing things that he knows happened.
Yeah.
From different entities.
Drawing the connection.
So he knows.
Yeah. Yeah, he knows. You know, part of this too, kind of that whole monologue here is just, it felt very much like Cope, like, guys, stop trading. You know, look over here. We got a great securities market here, and you guys keep going for the coins. Why are you doing that? Stop trading. I don't know why he feels like he needs to boost his value proposition. Anyway, happy 90th birthday to the SEC. It feels like they want to take us back to the 1930s with respect to the regulation, David. All right, so we've said it's the ETH price, back to the ETH price. It's all about inflows. That's what's going to move the markets on Ethereum. And there's some question as to what those inflows might look like. Let me give you an analysis from JP Morgan. They believe, this is an analyst report from JP Morgan, we believe the demand for spot Ethereum ETFs would be just a fraction of that seen for spot Bitcoin ETFs. The reason they say is Bitcoin, number one, had the first mover advantage. Okay, so it sopped up all of the demand. Number two, Bitcoin's halvening event. The halvening event was a big deal. Number three, the ETH ETFs won't have staking. Okay. Number four, Bitcoin competes with gold. ETH doesn't. And number five, there's lower liquidity overall in Ethereum. So those are the reasons.
Those are odd reasons. Reasons.
Yeah, there's actual quote. Demand for spot ETH will be negative because it doesn't do a halvening like Bitcoin.
That's ridiculous. No one in TradFi knows what the hell a halvening is. Like, the Bitcoin has a first mover advantage, I think does check out. Bitcoin halvening event is just not on the radar of TradFi. Like, whoever this analyst is a Bitcoiner, probably, because they're using a Bitcoiner like frame of mind. ETH ETF won't have staking. That's why there won't be demand for it. The Bitcoin ETF doesn't have staking either. Like, again, some elements that crypto natives know that TradFi just is unaware of. And lower liquidity in ETH, they are not aware that ETH is extremely price sensitive. In fact, this benefits ETH from the demand perspective because the price appreciation is going to drive FOMO because it's extremely price sensitive.
I'm guessing you're on the bullish inflow side of things then, David. You're not like this JP Morgan analyst.
Who would have guessed?
All right, so another estimate on inflows from James Safer and Eric Balchunas. James actually DM'd me, David, and he said he listened to the roll-up, and I think we gave a lower prediction on the inflows for James and Eric than they actually believe. I think they've revised some of their numbers. So James Saferd, one of the Bloomberg analysts, says, my number is 20 to 25% of Bitcoin ETF flows. And Eric Balchunas, his counterpart, has moved his estimate up to around 20%, though he thinks it might come in less. So larger than other estimates. I think last time we talked to James, he said like 10 to 20%. And now he's saying 20 to 25% with 20% as the base case. So what price would that translate to is kind of a question. Just on a pure inflows basis, let's say we get the higher end of James's estimate at 25%. That would imply 25% of Bitcoin inflows. That's what Ethereum would deliver. That would imply net inflows by the end of 2024 of 3.47 billion in additional buying pressure. And so the implied price performance of that, if you use like a 4x amplifier, which is like fairly reasonable back of the napkin calculation, given the lower liquidity of Ether's smaller market cap size, is a price by the end of 2024 of, you ready for this?
Yeah.
5,294 ETH.
I don't know if is it even possible to predict this? I don't think you can make forward, like, you don't know what the market's going to react.
It's just in a vacuum. It's an analysis in a vacuum. That's all.
It's now, yes, right. You can predict implied net inflows of $3.5 billion. We can that checks out. of like how much actual buying pressure there will be, you won't be able to actually anticipate what the market's reaction to that buying pressure is.
So like, you sound disappointed, David.
You could have a lot of sellers into that $3.5 billion. You could also have reflexive buyers of that $3.57 billion. I don't think that these are like solid. You can't predict this.
You could, but it's an estimate. It's not a prediction. It's an estimate, right? Based on some amount of inflows. But you sound very disappointed about this. So let me give you a better bull case. Some numbers.
I don't call myself disappointed. I just disagree with the concept of the prediction.
So here are some numbers you might like a little bit better. These numbers come from VanEck. So they put out an Ethereum report. They do price predictions. This is a price prediction for Ether for the end of 2030. So 5.5 years from now, David. So they have upgraded their price for Ether. And the catalysts here, they think, are the Ethereum ETF news, scaling progress, and their read of on-chain data. So they have upgraded their base case price prediction to 22,000 Ether by 2030. How do you feel about that number?
Let's see. 22,000. That seems like a good base case. I expect that to be the floor.
Yeah.
That's my floor.
That's your floor. Okay, so they not only give a base case, they also give a bear case and a bull case. Which one do you want first?
Give me the bear case first.
Bear case, $360.
What?
$360 is the bear case.
What?
Yeah. And here's the bull case. $154,000. So it's quite the range here. It's like it's all possible things.
Okay, so it's 2017 prices or the dollars of shitcoin prices.
Yeah, but they back into these estimates with like estimated revenue
with math
and like a validator cut, and they're like some fundamentals. But of course, you can kind of adjust the spreadsheet variables to whatever you want. But they do get the kind of the core fundamental drivers right, which is kind of cool. So. Are you?
I don't know how to reason. I don't know how to reason. I am somewhere between. I'm
22,000 and 154.
In 2030, I don't know if I'm bullish as $154,000, but I'm way more bullish than 360. So yeah, somewhere between those two.
I guess 5 years from now would be about like just a little longer than another Bankless pod. Like we've been doing the podcast for like 4 years.
One more Bankless.
Yeah, so we just got to double everything we've done in Bankless. We just got to double that, and we'll get to 2030, and we'll get to that 154K ETH. That's it.
We started Bankless at like $150 Ether.
Yeah,
and now it's 20.
Yeah,
times 25 times that.
This would be a $20 trillion market cap. All right, so that's bull territory there for you.
A $20 trillion market cap is like end game Ethereum. That's kind of what I expect to like see Ethereum when I like retire.
When you're like an old man.
Climb mountains for the rest of my life, yeah.
Grandpa David.
Yeah, that's when I'm handing my CryptoPunk to my kid kind of time frame. If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.